Okay, what is up, everybody? What's up, traders? Super excited for today's video. And man, we have got an amazing jam-packed video for you. As always, we're going to break down TLT. Okay, we're going to go over all the key levels that you guys need to know. We'll break down TNX because if you're trying to trade something like TLT, you got to be paying attention to the treasury yields. All right, of course, we're going to break down the SPY, the S&P 500. Guys, we just hit the wave 5 targets here recently, up at 475. Could this potentially be the top? Or is there data that proves the S&P 500 is still going to go higher? We'll break down all of that in today's video. And one of the big things you want to pay attention to when trading things like gold or stocks in the market is going to be the dollar. So we got to break down the Dixie, okay? So be sure to smash the like button, subscribe to the channel if you guys are new. As always, though, the content provided on this channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. So please be sure to read through the full disclaimer. If you're new to the channel, I actually started a completely free newsletter for you guys. It's called Investment Intelligence, and it gives out free, valuable finance content and free trade ideas every single week. I try to sprinkle in 1 to 2 free trade ideas, and this is what they'll look like, breaking down the conditions on the chart, showing you the chart itself so you can see the setup and then, read what it is that we're actually looking at and looking for. And many of these trade ideas have worked out very, very well. If you take a look at some of the most recent newsletters, all of these have worked out very, very well. You look at Teladoc, the stock ran up 14.5% since the time of the newsletter. All right. PayPal ran up over 10% after the newsletter came out. Rivian ran up over 40% after the newsletter came out. So you can get all of these trade ideas, all of these newsletters sent directly to your inbox, and it's also in the format of a blog. So you can go back and read some of the previous newsletters just in case you missed one of the old ones, or you want to just actually read through some of the previous things that we've written about. It's a very valuable resource. And if you feel like it, you can also just join the Investment Intelligence Discord itself. Okay, you can join now using the link in the description. That's where you'll get all of my custom scripts and indicators that I use to trade the S&P 500 and get these really nice returns. All right, as well as all of the different trade ideas and analysis, right? We talked about Teladoc. We talked about PayPal, right? Being in the newsletter, but Toast was not in the newsletter. Carnival Cruise Lines, not in the newsletter. SoFi, not in the newsletter. Um, many other plays, right? Analysis and trade ideas are available in the Discord, and it's only $10 a month, right? That's less than a cup of coffee a week. Trying to make it very affordable for people who have smaller accounts to be able to get in, right, and not cost a fortune. Anyways, let's get into it, okay? And let's talk about the bullish data because I've been extremely bullish, all right? And I've been showing the seasonality. And if you're a fan of the channel, I've been on the bullish side. So let's talk about tomorrow, okay? We're going to start off here with tomorrow, and we take a look at the open interest for tomorrow. This blue line is calls, okay? So blue is call open interest, red is put open interest. Look at all of these red puts just underwater, okay? The current price is right here. All of these puts are about to expire worthless tomorrow, all right? Meaning that they might actually sell, okay? If it's worth a penny or more, these people most likely will sell. So if they're selling put options, that's actually bullish pressure on the stock market to go up. And when you take a look, we're at basically 473. All right. If we were to come up to 475, all right, which is just below this 477 line here, where you can see that this is the highest concentrated actually right over here. All right. We may get a squeeze. We have PCE data coming in tomorrow. Now, think about this. CPI, core PCE, a lot of the inflation data and a lot of the data in general that's been coming out, the market has been rallying upon this. So if the market was hypothetically to rally tomorrow up to 475, then it's very possible that we could see a squeeze up to 477. And at 477, we would then potentially maybe even see another squeeze. Okay. So it's a very tough time right now to be bearish. Okay. And to really try to step in front of the freight train that has been the stock market rally. Right. Another way for you guys to visualize this, versus bar charts is if you were to just come over here. take a look at the open interest. Okay, so open interest means how many people are holding these call options, right? And this is for the expiration that is tomorrow. Okay, so Friday, and you take a look at 475, it's at 46,000 basically. You look at 476, 81,000, 477 over 10,000, 478 over 19,000, 479 over 32,000, 480 over 30,000. So if the SPY was to come up to 475, it's very possible that we could start to squeeze. And then you take a look above 475, there's more open interest at 476. This could cause more squeezing pressure to push it up to 477, 478, 479, or even 480. Okay. Now, that is just only looking at the bullish outcome, but this is something that I just don't want people to be caught by surprise by, right? Like all of a sudden, hey, why did the market just rally so much? You got to take into factor gamma levels and gamma exposure. Okay. And we're seeing a lot of bullish gamma right now. Okay. That's very evident by this chart right here. When you take a look at the blue versus the red, all right, we're obviously in positive gamma territory. And the closer we move up, the closer we are to potentially getting a squeeze. Now, that doesn't have to happen. Okay. There's always the chance that PCE could come in super hot for some reason, and maybe the market pulls back. But this is not something that I'm looking to aggressively short, and this is not a market that I've been really shorting at all. Here's a great stat for you. The small cap Russell 2000 made a new 52-week high after hitting a 52-week low just 48 days ago. So just think about that for a second, because a month or two ago, everyone was telling you guys, hey, the stock market is going to crash because take a look at the small caps. The small caps are making 52-week lows while the S&P 500 or the Nasdaq is trying to approach all-time highs. That's a very bearish signal. Well, we just had a complete turnaround, right? This is the shortest turnaround time in the index's history to go from 52-week lows to 52-week highs dating back to the 1970s. Okay. This is very, very important. And when you look underneath the hood of the market, so to speak, the share of Americans who own stocks have never been so high. Okay. And this is a percentage of US households owning stocks. And really what we see is that it plateaued right around through this area here. And here recently, it has completely exploded to the upside, right? There's a lot of factors really going into this. And shout out to Dr. Stocks right here. We've seen one of the strongest 36-day performances in history. Okay. If you take a look at the S&P 500 total return index rolling 36-day trading performance, here we are. We've seen one of the greatest 36-day performances in history. Now, the SPY, okay, which is the S&P 500 ETF, also has seen its biggest inflow ever, right? And so if this chart doesn't really do a good enough job for you, where you basically see here's the previous highest level in the past, back to 2019, we can actually zoom out even more and take a look at this chart here that goes all the way back to 1996, okay? And you can see here well above it, guys. So think about this right now. Does any of that scream bearish to you? Right? If we're seeing literally the largest amount of inflows ever in the S&P 500 ever, we're literally talking ever. Does that somehow scream bearish to you? And like is that a market that you want to short and you want to get ahead of and try to call the top on? Definitely not me. Okay. Now I'm going to be dropping a video very, very soon going over, some of the things to be cautious about, right? And some of the red flags that you do want to be concerned about. But just because there's signs of, things maybe being a little too frothy or signs that maybe the market could pull back, I'm not going to try and time the top here. I'm not going to come in here and say, hey, after we just saw the biggest inflows into the S&P 500 ever, now is the top, and now I'm going to aggressively short the market. And when we go over the data even more, it really suggests that the SPY could potentially go up another 4%. Right. And what's a factor that could drive this? Well, money market funds saw record inflows in 2023. Okay, that's just a fact. And the reason being was because of the, really high treasury yields that we saw. And so when we take a look at the TNX and we take a look at TLT later in this video and look at the technical analysis, we've seen levels that we haven't seen on treasury yields in a very, very long time. But right now, money market fund assets fall to 5.8.7 trillion in week to December 20th. So we're actually starting to see some of this money come out of money market funds. And why would that be? Well, because they were getting a really extreme rate that they haven't seen in a long time. Now that rate is dropping. It's literally dropping right now because the 10-year treasury yield is dropping, because the market is pricing in rate cuts, because of many different factors. And where are they going to put that money? Well, they're going to say, man, I've been milking 5% APY for the year in my money market fund. Meanwhile, the S&P 500 is up double digits. Meanwhile, the NASDAQ is up double digits. Meanwhile, NVIDIA is up triple digits. Many stocks are up over 100% since the October lows of 2022. So these people that felt safe, in the money market funds getting that 5% yield, well, they're realizing that that 5% yield isn't going to last forever and that it's actually dropping and could potentially continue dropping in the future. And so where do they want to put their money to work now? Do you want to put your money safely to work for 3 to 4% returns, or do you potentially want to invest in the stock market because a lot of people are FOMOing in and essentially missing out on these really big gains and want to potentially get more than 3 to 4% from a money market fund, right? That's one of the factors, in my opinion, which is not a fact, but just my opinion, driving the S&P 500 to see its biggest inflows in history. Okay. And if we look forward, take a look at the S&P 500 inflation adjusted price. So everyone always talks about inflation adjusted chart this, inflation adjusted that. Nobody ever really inflation adjusts the S&P 500. So if you actually inflation adjust the S&P 500, look at how far away we are from all-time highs, and it's up here in the 5300 territory. Okay? So think about that. All right? Just think for a second. The next time you watch CNBC and you see somebody say that their year-end price target is 5100, that their year-end price target is 5300 or 5400 on the S&P 500, just take into the effect, take into consideration the inflation adjusted price for the S&P 500 and where the inflation adjusted all-time highs are. So if we were to adjust for inflation, we are very, very far from all-time highs here currently in the market. Okay. Now, if you're looking at the non-inflation adjusted price, we're right around the corner and we're knocking on the door. And a lot of people are saying that we're going to get all-time highs in the S&P 500 before the year is over. Now, there's good reason for that. The Dow Jones hit all-time highs. The NASDAQ hit all-time highs. XHB home builders hitting all-time highs. You're seeing many things hitting all-time highs. So it's not, it's very reasonable, as a matter of fact, to assume that the S&P 500 could potentially hit all-time highs, right? It's not really, saying something incredible, right? Basically, that the S&P 500 is going to go up a couple of percent more and hit all-time highs. That's not really saying something extravagant, right? Now, when you come here and you take a look at dumb money confidence, okay, and this is from Sentiment Trader. All right. And oftentimes we are referred to as dumb money. Okay. So, take that as a little bit of an insult, right? If you're watching this video, most likely you're not an institutional trader or working at a hedge fund. And if you really take a look at it, dumb money confidence is not a bearish thing. Okay. There's this one time here where we get a little bit of a 3-month pullback. And then what do? We rally more, right? When we hit these dumb money extreme levels. Then over here, what do? We end up getting a moderate rally after we hit those dumb money, levels. And what is this? COVID. Okay. This is the pandemic crash. Nobody was prepared for this. So, you can really count this out. When you look over here and you see again, we're above that dumb money confidence indicator at extremes, right? There's no ill effects whatsoever, and the market just continues to push up higher. Now, here recently in the summer, we did hit, extremes on the dumb money confidence indicator, and we got a 3-month pullback. Now, what have we done since then? Well, we're actually coming up back to those levels. And so when you take a look, ultimately, it seems like you get these 3-month pullbacks, right? 3-month pullback, boom, 3-month pullback, and then you get a rally, right? And then you get the 3-month pullback, you get a rally, and then there's this period here where you have no ill effects whatsoever. Okay, so if we were to exclude the moderate rally then plunge that was caused by the pandemic, it seems that we get a 3-month pullback. Okay, and then the next time that we go into this territory over here, there's no ill effects whatsoever. So right now, is it possible that after experiencing a 3-month pullback, as we saw over here, the next time that we come up into this dumb money confidence indicator, could we potentially get no ill effects whatsoever? Is there any type of data that backs this up? Well, we'll dive into this a little bit more, but before we do, we really want to highlight here. If you take a look at, basically S&P 500 percentage change, and then you take a look at earnings growth of the beginning versus the end of the year. Okay, so that's going to be in the blue. Take a look here at this time period in 2017. Earnings growth was actually lower, slightly negative. S&P 500 rallied. Here we can see growth actually up, and what happens? S&P is actually slightly negative. Okay, same thing over here. 2019 growth negative, percentage change positive. And so you can see that these things are really not a good predictor of what the stock market is going to do. Right, in 2021 we saw growth, and in 2021 we also saw a positive percentage change. You look at 2022, we saw negative growth in earnings, okay? And then we also saw negative price action. And you take a look at 2023, this is more consistent with this year, 2019, 2018, and 2017, where you actually see a little bit of the opposite, where you see negative earnings growth at the beginning of the year versus the end of the year, and then positive percentage change in the S&P 500. So next time you hear somebody talk about, well, earnings forecasts and what we think earnings are going to do in 2024 do not look good, let's take a look at all of the times where earnings forecasts were not good, right? Okay, and where earnings actually didn't grow, right? We have one right here, positive in the stock market. Another right here, negative, positive in the stock market, right? Another here, negative, positive in the stock market. Another here, negative. We finally see some negative in the stock market. And then most recently, negative and positive in the stock market. So, you know, take all of these things that economists and other people are saying with a grain of salt, and really do your own research on, what stock performance is relative to earnings performance. Okay. And it's not always closely correlated. All right. The stock market oftentimes tends to bottom before earnings. Right. So that's a big thing to consider. All right. If you take a look here, this is a really, really just great example of it. Right. The stock market had a very poor performance if we were to draw a horizontal line from here for earnings. Right. So we can see earnings declined, okay, to a lower level. And what happened was the stock market priced this in ahead of time, bottomed, okay, before earnings continued going lower. The stock market bottomed before earnings bottomed, right? And we actually saw positive performance in the S&P 500, even though we saw lower earnings performance. Now, when you take a look at retirement accounts, okay, and you take a look at the percentage of U.S. households owning assets, again, we kind of touched on this in a previous chart before, but we really just want to highlight, basically this rapid acceleration that we've seen over the recent years and over the coming years, and this is something that again is just kind of like really driving the upward pressure in the stock market. Now, the playbook for 2024 via CNBC, via Tom Lee, via whoever this lady is right here with the green shirt and the green necklace. A lot of people are looking at some of the less known names, is how I'll put it. Okay, so 2023 was all about the Magnificent Seven. It was all about the AI stocks. And even Tom Lee, the biggest perma bull, is really bullish on small caps next year. Okay. And so a lot of people are looking and saying, hey, maybe there's opportunity in some of these value stocks that haven't really caught up to the market. Maybe there's a lot of opportunity in cyclical stocks and small caps. In different areas of the market, even financials and energy, I know a lot of people are bullish on. And so, when you think about it, you have XLK making new all-time highs, but there's not many other sectors in the stock market that's actually making all-time highs at the moment. So this is something that maybe you want to keep in mind in 2024. Remember that the narrative in rotation happens very quickly, and oftentimes what worked in the previous year is not necessarily going to work and be the winners in the next year. So a really good example of that was in 2022. Energies and financials did really well compared to, relative to some of the other sectors in the stock market. And then what do you see in 2023? Energy and financials not doing as good compared to everything else. So it's very possible that, we're witnessing the forecasting of the rotation, not only the forecasting, but we're witnessing the rotation happen right before our eyes. Many of these, I call them no-name stocks, okay, because they're not the 10, 15 most popular stocks in the stock market. And so nobody really pays attention to them. But there's been many stocks that, I've been playing, right? And that have been in the Discord, that, we're getting in them. And the next day they're up 6%. The next day they're up 8%. Within a week, they're up 20%. Within a month, they're up 40, 50, 60%. And a lot of these, all right, is really, in my opinion, rotation. Okay, you're seeing people that held a stock like one of the Magnificent Seven stocks. So let's just say Nvidia, for example, went up hundreds of percent. And they're saying, hey, Nvidia is now 30, 40, 50% of my portfolio. That's too exposed to me, right? It's time to rebalance. And so what are they doing is they're saying, well, what are some of the names that maybe have some good fundamentals, maybe that look good on a technical analysis standpoint? They're saying, let me sell some of my winners, take some of that money out of there and rotate into some of the losers, right? So this way they're in the laggards and the leaders, and it's very possible that that could be the real trend in 2024 after many of, the Magnificent Seven and really the top, 10 to 20 names in the stock market saw most of the gains for the year. Now, overbought is a very bullish thing. Okay. And in many of my technical analysis videos, I go over how just because something is overbought does not mean it cannot go higher. And so when you take a look at the S&P 500 performance after over 40% of the components make a 14-day RSI over 70, that sounded like a lot of jargon. Basically, what you want to pay attention to is that the 1 month return is about 4.2% on average. Now, 3 months, it's 8.8%, 6 months, it's 14%, and 12 months out, aka a year, it's 25% higher. This is extremely bullish. Okay. Being overbought is a very bullish thing, right? We saw a huge correction here recently during this week in the market when the S&P 500 RSI was over 80, right? I mean, it makes no sense, or it makes complete sense, honestly, that we see, all of a sudden a pullback when the RSI is just chilling over 80, right? There's lots of algorithmic trading in the market. And Kathy Woods, in her most recent interview with Elon Musk, she just talked about how about 75% of trading in the stock market is done by algos. So just think of that. It's done by computers. And so computers are coming in here and saying, hey, the RSI is over 80. It makes sense that this is overbought. Let's sell, or let's potentially short, or let's potentially buy puts. And that's why we saw that rapid acceleration to the downside. Okay, but that doesn't mean that, we had one bearish day because we're extremely overbought, that's a bearish thing. Overbought is actually a very bullish thing if you look historically at the data in the stock market. And this is why I'm telling you guys that it's very possible we could potentially make all-time highs in the S&P 500 finally because of the 1 month return statistics. Now, if you take a look at 7 win streaks, these aren't bearish either, and these tend to happen in bull markets. Now, unless you've been living under a rock, we are in a bull market. Okay. Whether you think that this is the biggest bear market rally ever in history, at the end of the day, you have to accept the fact that the technical definition of a bull market is rallying 20% from the lows. And we have already done that. We've entered a new bull market, and a 7-week win streak is not bearish. Okay. This is what happens in a bull market. And if you take a look at the historical returns after a 7-week win streak, the 1 month return is about 1%. The 3 month return is about 3%. Okay, the 6 month return is a little bit closer to 4%, but still about 3%. And the 12 month return is about 8%. All right. So, it's not like I'm saying that, hey, the stock market is going, to 6,000 in the next 2 months, in the next 3 months. But really, I'm just providing you guys the data that says, hey, I don't want to get in front of this freight train right here. I'm not looking to all of a sudden flip bearish after we have the stock market RSI being over 80 and after we've had a 7-week win streak. That just doesn't make sense. That's not a high quality setup, especially if you're a trader. Okay. And so many people will look at economic data, they'll look at credit. Okay. They'll look at credit spreads. They'll come in here, they'll talk about auto loan delinquencies, they'll talk about credit card loan delinquencies, they'll talk to you about student loans. But what they won't talk to you about is the historical performance of the stock market relative to what's happening right now. And that's what I'm trying to share with you guys. Okay. I try to go over all of the different data sets. And if this spills over into January and turns into a really good, basically return for January, this could be extremely bullish for the rest of the year. Okay. So, not to sound like a perma bull, but again, we're just going over literal facts. Okay. All of these are facts and just data provided to you guys. And so if stocks are down the previous year, this trifecta is very bullish. Okay. And so what we're talking about is getting the Santa Claus rally, which if you have not watched my Santa Claus rally video, I go over the historical odds of how there's a 67 to 70% chance odd of success of getting a bullish Santa Claus rally. Now, when you combine all of this data together and you get a Santa Claus rally with the first 5 days, and then you get a positive January return, the full year return is always double digits. Okay. Now it ranges from 10% up to 45%. So, that's very important to keep into context. But at the minimum, okay, it's 10.8%. And if you were to take a look at the average return, it's 27%. I can't even imagine the stock market rallying another 27% next year. But again, all of this data is just something that has me not wanting to come in here and try to time the top, okay, every single day or every single week, just because I see some type of article or some type of data set that seems like it's a little bit bearish. But at the end of the day, none of us are economists, okay? And what we really care about if you're an investor or trader is what are stocks going to do? Okay. We can read as much data about the economy or read as much data about the news that's going on. And what's really important to investors at the end of the day, or is what is my portfolio going to do? Is it going to go up or is it going to go down? And these data sets are really going to give you a good idea to help manage expectations, right? Some of them on a little bit of a shorter term, some of them on a longer term, right? And you can combine all of this together to come up with your own thesis and your own expectations. Now, if you take a look here at the Dow Jones Industrial Average, this chart is amazing. Okay. And so to really break it down for you, here's the price of it. Here is the, maximum drawdowns from the all-time highs. So there's been periods here, okay, like the Great Depression where the Dow Jones went down over 80%. All right. But what's really amazing about this chart is take a look at the consecutive days without an all-time high. This has been in a steep downtrend, guys. And we're now basically at the shortest period of consecutive days without an all-time high in the Dow Jones Industrial Average. All right. And the reason being is because of a lot of the data that we went over previously in this video, in my opinion, right? You take a look at the number of US households owning assets, right? And you take a look at the retirement accounts that own ETFs and different things like that, it really just seems that more and more people over time are getting exposed to the stock market. Okay, data is becoming more easily accessible. It's becoming easier and easier for anyone to invest into the stock market. And the more people you have looking to invest, and the more people you have with access to data and different things like that, ultimately the more money is going to flow into to stocks in general, right? I mean, that's clearly evident. We literally just set a record for the most, the highest inflows that we've ever seen into the S&P 500s by ETF. Now, let's get into some technical analysis. And before we go too deep into TLT, I want to remind people, okay, let's say you are someone who is pretty bearish on the stock market for next year. Stocks and bonds behave in different ways. Okay, so if you don't know, TLT actually just got out of its bear market, right? It actually just started a bull market very, very recently. Okay, versus the S&P 500 started a bull market much earlier. Now, the big difference is that TLT's bear market lasted 3 years. Okay, the S&P 500 bear market was, a year, maybe a little more, maybe a little less, right? We're not trying to, get too deep into that. But if you didn't know, the bond market has been in a bear market for basically 3 years. Okay. And if the stock market was to go into a bear market next year, the number one contributing factor of that most likely would be a recession. Now, what happens in a recession with the Fed in particular, right? Well, they try to step in and stimulate the economy. Well, what's one way that they stimulate the economy is they end up cutting rates, okay? And so if they cut rates, that's going to result in treasury yields dropping. So the TNX is your 10-year treasury yield. Okay. And we can see that it's been on a rapid downtrend. What's happening right now is the stock market has been pricing in rapid rate cuts from the Fed. Okay. And so the bond market on top of the stock market is pricing this in as well. And that's why we've seen this very aggressive sell off or downtrend in treasury yields. And the way bonds work is as yields go down, the bond ETFs and bonds themselves are going to go up. And so we've seen an aggressive uptrend, right? And it's unsustainable. Okay. Let's just be honest, right? The way that this is moving is it's not going to move in this bullish channel forever. Okay. And that's, pretty much just a fact, right? So what's the big thing to do right now? Okay. If you're someone who is scared that the stock market is going to crash next year, and you think that it's going to crash because a huge economic downturn is going to happen, well, TLT is the play for you, okay? And it may not make money overnight, but just keep in mind the whole concept of how bonds work, right? As treasury yields go higher, bonds go down, and as treasury yields go lower, bonds are going to go higher. So if you take that into consideration and you think, hey, well, the market's pricing in Fed rate cuts next year, right? And we're seeing a lot of that being priced in early right now. Okay. And that's why we've seen this aggressive uptrend, from the low 80s all the way up to basically 100 in TLT. The reason we're seeing this again is because of those rate cuts being priced in. And, if you're someone that is bullish and think that, the Fed is just going to cut rates because the economy is so strong and there's no reason to keep rates this high, bonds are still attractive. If you're someone that's bearish and you think that the, economy is going to collapse and you think that the stock market is going to collapse and that the only reason the Fed is going to cut rates is because something's going to break, again, that's bullish for TLT. So at the end of the day, TLT, in my opinion, is one of, the more safe and considerate or conservative bullish plays to play out there in the markets, right? Whether it's the stock market or the bond market or many other things, doesn't mean that, You're going to try and play it short term and go all in on zero DTE, TLT call options that expire tomorrow? No. But what I'm saying is that, if this thing was to even pull back to the 90s, that's healthy, guys. And it really, shouldn't affect your narrative, right? At the end of the day, you need to have a narrative and a reason for buying into something. You can't just buy into something because you watched a YouTube video or you read a tweet from someone that said, hey, buy this, it's going to go up. And then you panic sell, right? So to me, the TLT, I mean, if this thing drops back down to 90, I'd be very glad to just buy a ton of this and really wait, whether it takes a year, whether it takes 2 or 3 years. It all depends on your own time horizon, but I think that there's great opportunities in this. Now, on a shorter term basis for potentially any trade ideas, right? If we take a look here, we have a little bit of a channel, okay? And we're trading in a little bit of a range right now. We initially had this bullish divergence, which if you're not familiar, just take a look how TLT made a low, a lower low, and a lower low. So 3 lower lows, and then we made a low, a higher low, and a higher low. On the RSI, this is your relative strength index. We went lower, we went higher right here, bullish divergence. It's that simple. Okay, that's, simple breakdown. We had a nice rounded bottom right here. We love those, and we really put in the bottom there. Okay, and started a significant rally. Look at where we're at right now. Okay, we're very close to potentially breaking this trend line. Now, does this mean that TLT has to absolutely collapse? No. Okay, time is also a factor into trend lines, and a lot of people don't take that into consideration, right? If this was to just simply move sideways, okay, it's technically going to break the trend line, but that doesn't mean that it actually collapsed right here, right? But you do want to watch this for consideration, right? If you were to see something like a breakdown retest, and then, what seemed like a strong push lower, then most likely you would see TLT coming lower. Now, overhead 101.55 is going to be the major resistance level. Above there, 106.07 is the next price target. Below the current levels that we have, 97.03 is going to be support. That would give us our first gap fill right here. If we were to break below there, all right, 94.74 is going to be our next gap fill and our next area of support to the downside. And then below there, I'll give an update by the time we get to there, but we have 93.2, 91.2, 89.1. Those are also going to be some other areas of support to the downside, just in case TLT was to reverse its recent, steep uptrend and get a little bit of a retracement. All of these levels right here are healthy retracement territory to continue the uptrend, right? So it's not like it's the end of the day and TLT is going to come down and make new all-time lows just because, let's say, it falls to 89 or just because it falls to 93. So keep that in mind. Now, when you look at TNX, okay, which again is going to be your 10-year treasury yield, these are going to move opposite of what TLT does. We broke the uptrend, right? So we had this very, very strong uptrend. We've talked about the strong uptrend in TLT and how it could potentially break, but TNX is not supporting that. Okay, at the moment, when you take a look, TNX was extremely bullish and it just completely broke down its channel, right? So if you were to take a look, again, all of this is very algorithmic and very structured, right? If you take a look at the structure, right, clean selling structure here, okay, when we go back to our previous chart over here, we take a look at TLT, you can see very clean buying structure, right? I mean, it's not hard to spot, right? Buying structure, and then over here, we have the selling structure. And these are things that you just want to consider and keep into, factor, right? So we have the strong selling structure here. If we were to rebound towards the top of the structure, that would make a little bit of sense. 4.187 on the TNX would be an area where we would look for potentially some resistance for the next move down. Now, if we reclaim 4.187 as support on TNX from the resistance, there's always the possibility that it could come back up to 4.715, but there's a lot of work to be done before there. Now, we did break through 3.92 on the TNX, and the big question we have to see now is, will we come up, reject this, and head lower? Will we come up, fill this gap, head lower, or could we potentially come back up to that 4.187 level, right? This is something you want to monitor. TNX is very oversold. You look at TLT, it's very overbought. both of them testing some trend lines, and suggesting that, hey, we could see a little bit of some mean reversion. So don't panic about that. And when we take a look at the S&P 500 and we take into account a lot of the historical data that we just went over in today's video, and the potential for the S&P 500 to go up from about 1% to 4%, over the next 1 month, right? It's very possible that we get above 480 and we get into that all-time high territory. SPY has already hit the bullish price targets right here. The last time that we went long on SPY in the Discord, for a swing trade was right over here. We had our clear bearish below level, and I tell you what, it really has just been a magnificent past couple months in the stock market. All right, and when we take a look and try to factor into what could potentially continue the S&P 500 going higher, when you take a look, it's been overbought for so long, right? And it looks like, things could be trying to top out here. Is there anything that can actually push us higher? Well, the dollar, right? And you take a look at the Dixie, and we take a look here, and we have a left shoulder, we have a head, we have a right shoulder right here. And it's very possible that if this inverse, or not even an inverse, if this head and shoulder plays out, the Dixie is going to head down to this 100 to $99 area. Okay, so let me just draw that in a little bit clearer for you guys. Going to come down to that 100 to $99 area. That is going to be bullish for stocks. At this point, we would potentially be looking for a bounce, right? Somewhere in this area on the dollar. And that's most likely when, if we were to come down here, where we would end up seeing all-time highs in the stock market, and then potentially see a little bit of a pullback and correction afterwards. Okay, so pay close attention to that. The dollar is something you're going to want to pay attention to. There is some bullish divergence going on. We already explained what that is, but that's where you're making lows and then lower lows and then lows and higher lows on the RSI. If we can break this bullish divergence trend line on the Dixie, that would be a bullish signal for stocks, and also a signal that potentially we're coming down to that 100 to $99 area on the US dollar index. Okay. So, hopefully you guys enjoyed today's video. I really appreciate you guys watching it. If you did enjoy it, please smash that like button, subscribe to the channel. Remember, you guys can always hit me up on my Ko-Fi page and click on the commissions tab. Using the link in the description, it will take you to my Ko-Fi page, and that's where you can book a 30-minute or a 1-hour session. All of the Discord members get 20% off all of those as well. So just kind of another incentive to, join the Discord. Remember, if you don't want to join the Discord for $10 a month, you can always just sign up for the completely free newsletter. Okay, I try to put out as much free, valuable content as I can through YouTube and also through the newsletter. And that's where I give out 1 to 2 free trade ideas a week, highlighting the conditions on the chart, showing you guys the chart itself. And again, if you take a look at, most of the newsletters, again, it's in the format, there's a website associated with it. So it's kind of in a blog format. You can go back and read. Many of the trade ideas have worked out very, very well. And the reason being is because I tried to choose quality over quantity. So I'm not sending you guys 5 to 10 different trade ideas every single day into your inbox, bragging about one that works. Rather, I try to take the time and look for high quality setups, present you guys to those high quality setups, with also ideas of how to manage your risk, because again, any trade can turn against you at any single moment. So you always want to have some type of risk management. And if you really want to, remember, just join the Discord. Okay, it's only $10 a month, less than a cup of coffee a week, and that's where you can access all of the different trade ideas, all the different analysis, custom scripts, indicators, everything that I use to really help give me an edge in the market. Thanks for watching, and I'll see you in the next one.